Hello everyone, this is Gautam from Shailaja as. It's another video on your mains in minutes where we are going to discuss on the recent current affairs issues from a UPSC civil service examination perspective. In this video, I'll be talking about your GST 2.0 reforms, which was announced by our Honorable Prime Minister Narendra Modi on your Independence Day. And it was recently notified or approved by your GST Council in the September meeting. And it can also be considered as a Diwali bonanza from the union government, aptly timed before your Bihar elections, right? So before we look into the key features of your GST 2.0 reforms and what is going to be the possible economic impact on it, and what are the concerns associated with these reforms, let us try to briefly look or try and have a brief background about this GST itself. Okay. GST or goods and service taxes was implemented across the nation by bringing in a Constitutional Amendment Act in 2016. That is your 101st Constitutional Amendment Act, which came into effect from 1st July 2017. Right? It was considered as a landmark legislation whereby it was considered or aligned or you can say compared with your, you can say, integration of your princely states by your Sardar Vallabhbhai Patel. On a similar lines, why it was equated on that lines? Because it was equated that there were different states that are considered as different economic markets, and they were all brought in together under one platform through your goods and services tax, right? So why it is considered as an economic integration? Because it is considered as one nation, one indirect tax. Okay, because your goods tax or service tax are considered as an indirect tax, whereby the incidence of tax is on a different entity, where the actual payment is done by a different entity. For example, if the service tax is imposed on your hotel business or education business of 5% or 18%, it is not being actually paid by the business firms. They pass it on to the consumers, who in turn are going to pay the, you can say, the tax amount. Right now, earlier what was happening? Each state was having their own indirect taxes, because it was a part of your constitutional federal structure, whereby states were empowered to impose taxes on, you can say, on these certain items. Right. For example, Karnataka had a different tax rate with regard to sales. Gujarat had a different tax rate. Maharashtra had a different tax rate. Tamil Nadu has a different tax rate with regard to your manufacturing, with regard to your sales. Even now, if you look into it, the petrol or the taxes on your petroleum products or the actual prices of petrol and diesel varies from one state to another state, because it is under the purview of your state governments. Now, what has happened because of this particular structure? If a good was supposed to be moved from, for example, your Gujarat to Kerala, okay, so it used to cross your Maharashtra, Karnataka, and then enter Kerala. So on each state, it has to pay taxes. Since it is passing through these states, something called as octroi tax was present. So it was a cumulative effect or a cascading effect used to take place because of different, you can say, economic markets present. But now everything is now under one market. A goods which is produced in Gujarat has to pay tax only in the destination state. That is, wherever it is going to sell the products, it has to pay the tax. So that is in Kerala, if it is selling the product, it has to pay the tax. It is going to go into the revenue account of your Kerala state government. Okay, so that is the, you can say, idea of a goods and service tax, whereby different, you can say, state indirect tax market were brought in or merged in to create a unified economic market. Right, so it replaced numerous central and state level indirect taxes such as your excise duty, service taxes, value-added taxes with a single tax called as your goods and service tax. It is again having a two component. One is your central GST and second is your state GST. And if it is involved in transport, third component is your integrated state GST, right? So, but ideally it is the same tax rate uniform across the country. Earlier, a tax on, for example, your toothpaste sold in Karnataka was different, tax on toothpaste sold in Gujarat was different, tax on toothpaste sold in Delhi was different. So the prices was different. Even now, if you see, the tax on alcohol is still under the purview of your state government. So tax on alcohol in Karnataka is different, tax on alcohol in Delhi is different, tax on alcohol in Puducherry is different, tax on alcohol in Goa is different. Okay, for bearing a few items, most of the goods have been brought into your GST bracket. Okay, so earlier different goods were taxed differently in different states, and if one good was to traverse from one state to another state, it used to pay multiple taxes. Compliance burdens is going to increase. There's going to be a lot of administrative work involved if there are multiple rates across multiple states. So that impacted your ease of doing business. Suppose if industrial or any company wants to set up its office in Karnataka, Gujarat, Maharashtra, Tamil Nadu, every place it has to file your different income tax proposal. So financing mechanism was different, administrative expenses was different, compliance burden was different. It was more. Now with unified your taxation regime, everything is going to be now simplified, right? So that is the idea behind introduction of your goods and service tax. The advantage, as I told you, reduces cascading effect of taxes, creates a unified national market, and simplifies your tax administration. It has created 4-tier structure. One you have 5%, then you have 12%, 18%, 28%, and for essential goods and items, they were taxed at 0%, right? So effectively, when it was introduced in 2017, it had 0%, 5%, 12%, 18%, and 28%. Right? Certain goods, as I told you before, like petroleum products, alcohol, and electricity, have been kept outside the ambit of your GST framework and are taxed separately by your state governments. Right? Now, who is going to impose the taxes? Who is going to decide which category of goods needs to be put in which bracket of your taxation? It's going to be decided by your GST Council, which is a constitutional body established under Article 279A. It is having representation from both your state government as well as your central government. So all the state finance ministers are a part of it. It is chaired by a union finance minister. If you look into the voting process, the central government's vote share is having a total weight of 1/3, 33% of the voting share is with the central government. The rest of all the states combined, okay, the rest is with all the states combined. So all the states combined are having 66.67% of vote. And if any proposal has to get through with it, at least it has to get 75% of your vote share. In a sense, central government is having a veto power. So central government has to agree if any of the proposal in your GST council has to get an approval, right? So this is you can say the idea behind introduction of GST. Let us look at some of its achievements. It has increased the number of taxpayers from 66.5 lakh to over 1.51 crore by April 2025. The average monthly collections has seen a steady growth. In 2017, your average monthly collection was 82,000 crores, but it has reached around 2 lakh crores every month in the year 2025. It has lowered the logistics cost. As I told you, if a good wants to travel from one state to another state, it has to pay taxes at multiple states. Now that has been brought down. Some estimates suggest that logistics cost has been brought down by as much as 20%. So earlier, if logistic cost was 100 rupees from transporting a goods from Gujarat to Kerala, now it has brought down to around 80 rupees, right? And it has boosted formalization. Earlier, people were not willing to be a part of your taxation system because it was too much of compliance and taxation rates were also very high. Now you have you can say a simplified system. So more and more firms or businesses want to enter into a formal system, right? So there is a greater formalization of an economy because of the introduction of your GST regime, right? Now the GST 2.0 reforms, let us quickly have a look into it. What all items have been brought in? First and foremost thing, your 12% taxation bracket has been removed. Okay, so earlier there was 0, 5, 12, 18 and 28. Now it's only 3, 0, 5 and 18. Now instead of 28, they have introduced a new, 28 is also now removed. So they have introduced a category called as your 40% tax for your sin goods, like your tobacco, right? So most of the goods are now falling under the bracket of your 5%. Only few of the goods are falling under the bracket of your 18%. Okay. So if you look at the average rate of all the goods and services, it has been brought down from earlier 16% to almost 11.5% because of these reforms. Now, individually, sector-wise, let us look into what changes has been brought in. First thing is your daily essentials like your hair oil, shampoo, your soap, toothpaste, toothbrush, shaving cream has been brought from 18% tax to 5%. Okay. So your all these essential items, the cost is now going to, it is expected to reduce. Okay, your butter, ghee, cheese, and dairy products, earlier it was taxed at 12%. Now it is taxed at 5%. Okay. Now when it comes to your healthcare, your insurance products were priced at 18%. Now it has been brought down to 0. So idea is to penetrate or give a boost to your health insurance so that its pricing is going to come down, right? Your education, your maps, charts, globes, exercise books and notebooks, earlier they were all taxed at 12%. Now it has been brought down to 0. So it is a boost to your education sector. The counter aspect of it, the private coaching institutes have been now taxed at 18%. It's considered as more expensive. Now, whatever we are doing right now, they're all coming under the bracket of your private coaching, right? Next, agriculture also, tractors and drip irrigation systems and sprinklers. Earlier, they were all taxed at 12%. Now, it has been brought down to 5%. Automobiles, most of your motorcycles and your petrols below a certain level, which are considered as non-premium segment. Earlier, they were taxed at 28%. Now, they have been brought down to 18%. So, your automobile industry is going to get a boost. Okay. Electronic appliances like air conditioners, TVs, LEDs, all your electronic items. Earlier, they were all taxed at 28%. Now they have been taxed. Now they are going to be taxed on 18%. Okay. So the idea is that they have brought down most of the everyday appliances, healthcare sector, agriculture sector, automobile sector, and your electronic appliances. They are trying to reduce the price by bringing down your taxation rate, right? As I told you, a higher rate of 40% has been introduced for a certain luxury and sin goods. That includes your high-end cars, your tobacco products, and your yacht, right? Now, beyond this tax rates, the reform also tries to ease the compliance, okay, or ease the tax administration part of it with regard to easy registration, easy filling out of GST forms, and quicker returns, right? So, they are trying to not only alter with the GST rate structure, they're also trying to alter with the process itself by trying to make it more simple and easier to use, especially for your small and medium enterprises, right? Now let us look at the expected economic benefit. First and foremost, as you all know, when the price is going to come down, there's going to be increased demand. Okay, suppose if a good or if a shirt is now priced at 1000 rupees, tomorrow it is now being sold at 800 rupees or 700 rupees, you tend to buy more and more in the market. Now, why all this, most of the showrooms or most of the, you can say, firms are going to go for sale, especially during the festive season, because it is going to create more and more demand, right? Your big billion day sales by your Flipkart, all these are playing on the price and the basic economic factors, whereby when you bring down the price, you're going to increase the demand. The same logic is being expected out of your GST 2.0 reforms, whereby they are going to, the prices are now going to be reduced, so there's going to be increased consumer demand, right? So reduced prices is also going to reduce your inflation. Okay. Inflation is general rise in price of goods and services in an economy. Now with reduced taxation, the general rise is also going to come down, right? So when you have both these things, it's also going to be a stimulus for your manufacturing sectors. So since the tax rates has also come down, since there's going to be an increased demand, there's going to be a boost for your domestic manufacturing. And whatever is the domestic manufacturing, it is also going to give a boost for your export, right? Especially in the backdrop of US importing your tariffs. In order to make our goods more competitive in the international market, I think this rate rationalization is a step in the right direction, right? So these are all some of the benefits of or expected economic benefits of your GST 2.0. However, the concerns still remain. Now let us briefly look into it. First thing is your abrupt implementation date. It's implemented or it's being effective from your 22nd September 2025. Now it's it's in between your monthly compilations or monthly filing or tax filing cycle. So all the businesses needs to get adjusted, right? So that might, if they had given us some bit of a leeway, it would have been better. Second thing, there is going to be a net revenue loss of expected of 48,000 crore rupees. That's comparatively less when you look at the overall budget. Budget is around 32 lakh crores. The union government budget. Your state government budget is around, for example, Karnataka state government budget is around 2.5 to 3 lakh crores, right? So in that, I think very minuscule loss, but it is going to be overcome with the increase in demand and with the increase in consumption and increase in sale of goods, right? However, with the compensations cess that is going to expire states are concerned that they are going to lose out on the revenue. Now, what is this compensation says? See, when states were having their own individual taxation powers, and they were asked to join the GST platform where the taxation powers were lost to a GST council. So earlier, if a state government wanted to increase the rate of your sales tax, it could do it by passing a money bill in its state legislature. But if the state government wants to do it now, it cannot do it all by itself. It has to put forward a proposal in the GST council. GST council has to pass it with 3/4 of a majority. It's a tedious process, right? So, and it was also expected that states, especially your manufacturing and high growth states, are going to lose out on the revenue because your GST is a destination based tax. Most of your manufacturing industries are located in your highly developed states like your Tamil Nadu, Maharashtra, Gujarat, and Karnataka. And state governments were imposing excise duties on them and they were earning revenue. Now, what is happening, even if these industries are located over here, wherever the goods are being sold, suppose all these industries' goods are being sold in Bihar or Uttar Pradesh, the taxes is going to be levied in those states and revenue is going to be accruing to those governments. So it was felt that developed states are going to lose out on the revenue. And in order to bring them on board for this GST council, it was proposed that whatever is going to be the loss, it is going to be compensated by the union government itself. By taking an average growth of state revenues, they arrived at a figure that they are going to compensate for a period of 5 years. It was extended for a period of 2 years because of this COVID pandemic. Now it is going to set to expire, and states are now concerned with this new GST regime, GST reforms. They are expected to lose out on certain revenue, and they want this compensation cess to be extended for a period of another 5 years. So this is a federal issue. This is a taxation issue. We'll have to wait and see how the central government is going to respond to this. Right? Anti-profiteering need. Most of the times, what is happening is that whatever is the tax rate that has been lowered, it is not passed on to the consumers. For example, if this pen is costing, for example, 100 rupees and tax of 18% is imposed on it, so it is priced at 118 rupees and it is sold to a consumer at 118 rupees. Now, if the taxation rate has been reduced to 5%, ideally what should happen? 100 rupees plus 5 rupees, 105 rupees, it should be sold in the market. But most of the firms, what they feel, it's time to shore up their own profits. So they tend to keep the price as 118 itself. The remaining 12 rupees, they are going to show it or use it for their own profits. So there is a resistance with regard to passing on of the, you can say, tax rates that has been cut down. And in order to avoid this, they are saying that government has to be more watchful and it has to monitor the implementation aspect of it. So that is called as an anti-profiteering need. Okay, so that needs to be overcome, whereby the benefits are passed on to the actual consumers. Right? Now, broader structural issues continues with regard to your GST appellate tribunal delays. And you can say the challenges that are being faced by your small businesses, especially with regard to filing of your taxation returns or GST returns. So every month they have to file it at least once, and that imposes a cost on them. In the market rate, they're charging around 500 rupees to 1000 rupees for every month filing, even for a small kirana store. So that is considered somewhat as an harassment for your small business owners. Okay, so if they are able to streamline this process and make it more friendly, it will be better for them, right? Now, let us look into the question. They are asking, GST 2.0 reform is a boost to consumption, especially at a time of acute uncertainty on the external front, in the sense where your export market is facing challenges because of rising protectionism. Evaluate the role of fiscal policy tools like GST reforms in supporting domestic demand when external growth engines face headwinds. They are saying how these taxation reforms are going to drive economic growth. What are the positives of it and what are the challenges associated with it? So you can attempt this question and send it to me on WhatsApp on this number, or you can email it to me on this email ID. Thank you.